Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today is the 23rd of December 2020. Alright, let's get into the news. So, a bit of more news regarding the kind of Ripple drama from the last, 48 hours or so. So, it came out yesterday that the SEC is not only charging Ripple and Ripple the company, but also the two executives, two of the top executives at the company, being the CEO, Brad Garlinghouse, and Christian Larson, which is one of the company's co-founders, and the former CEO. So this is a pretty big deal. They're charging them with conducting a $1.3 billion unregistered securities offering. And as I said, they're not only charging Ripple the company, but they're charging the executives in an individual and personal capacity as well, which is quite of a bigger deal than just charging the company. I'm not going to claim to be a legal expert here and know what the outcome of this is going to be. I mean, I kind of spoke about it a bit yesterday, how Ripple and XRP have been, under scrutiny for a very long time. A lot more information came out about this as well. Basically, the Larson and Garlinghouse basically sold $600 million worth of XRP for their personal gains, which is, if this is an unregistered securities offering, they've obviously broken a bunch of laws here by doing this, and they've enriched themselves on the back of this. But basically, there's a really great thread from Stephen Paley here that I suggest you go and read. It'll be linked in the show notes, of course. And he basically goes through the key points here and basically, why this is such a big deal, things like that. What they're actually charging them with, how much they actually sold of XRP to the public. So you can actually see this table here for those watching. If I click in here, you can probably see it better. So there's a table here that basically shows that Ripple sold XRP to both the open market and to institutional kind of investors as well. So they actually ended up selling more on the open market during 2017, 2018, and 2019 than they did to institutional investors, which, I mean, it makes sense, I guess, like 2017 especially, right, where there was a lot of, feverish kind of people in the market, right? XRP went up to, I think, like $3.50 or something like that. So yeah, it just shows that they've actually been selling this not just to institutions, but also to a lot of retail investors as well. So they basically netted a total of almost $1.4 billion here. They've even been selling during 2020 as well. They sold $115 million worth to institutional investors there as well. I'm not sure how happy those institutional investors are right now if they've held on to it, but yeah, just a little table there. If we click out of that, we can basically see here that they also paid money to exchanges to get listed. Now, this isn't unheard of, right? Everyone knows that certain exchanges will charge a listing fee, and if you pay it, you'll obviously get listed. But apparently, Ripple was very aggressive about this, and it was one of their mandates to get XRP onto like every exchange that they could, which makes sense from a kind of liquidity point of view, where they wanted to build up liquidity for the token or for the coin or whatever you want to call it. And as highlighted here in this picture, it says Larson and his wife personally netted approximately $450 million from these XRP sales. So the common narrative from Ripple has been they're selling XRP in order to fund the developments of Ripple. But in reality, and what everyone knew already, was that they're selling it to enrich themselves, essentially, right? It's not really helping the company. It's not doing much on that front. So yeah, I don't want to spend too long on this today because there's a bunch of exciting Ethereum stuff to get into, but I think this is big news because as you can actually see in the markets right now, XRP is dropping a lot and it's actually dragging the rest of the market down with it. And that's simply because, XRP is one of the biggest coins, like it's third. There's a lot of bots that trade against, the bigger coins on exchanges, and now the markets are just reacting to that, and it's kind of caused a chain reaction here. So this lawsuit against Ripple is a big deal for, I guess, like the wider market as well, just in terms of perception and things like that. People are now saying, well, if XRP is an unregistered security, then so are all these DeFi tokens. So, without further clarity from these regulators, we can't actually know what is actually going to be a security and what isn't going to be a security. So it's very hard to tell. But I think with Ripple, they're just like the biggest, right? And they've obviously done a lot of shady things in the past with XRP, so it makes sense for this to happen. But yeah, I'm very curious to see how this plays out. Do they pay a fine and get away with it? They're not going to go to jail or anything like that, right? But do they go to court, try to fight it, and then eventually settle? From what I've seen, apparently they've been trying to fight it and they don't want to settle. So maybe this year will make it all the way to court, and they'll have to sit in there and they'll have to kind of like convince a jury that they didn't do this thing. And if they lose, that's even worse for them. So yeah, we'll see what happens with this. I'll keep you guys updated. And let's move on to some more exciting things. So DeFi Pulse released their new Bitcoin at Work section today. So there's a thread here that explains it, but you can basically see it here. So this is a page on DeFi Pulse that's dedicated to Bitcoin within Ethereum DeFi. Now, I mean, it shows Bitcoin on Ethereum DeFi, but basically it's just showing the tokenized BTC. So you can see here that each of the tokenized BTC versions are listed. Obviously, Wrapped Bitcoin is the largest. Then you have Ren BTC, HBTC, and a bunch of others, right? There's a ton now. So if we click through here to WBTC, we can see that its growth over time, but it doesn't actually show where this BTC is, right? Or where this WBTC is. It doesn't show that it's in Uniswap or Compound or whatever like that. It just shows that it's been growing. And you can see the growth has actually been quite amazing here. If you go to 1 year, right, it was basically non-existent at the start of this year, Wrapped Bitcoin. And then as yield farming heated up in June, when Compound's kind of yield farming kicked off, we saw that explosion, right? And it's kind of like gone down a little bit and stalled out here over the last few weeks. So yeah, I mean, I'm glad they've got a dedicated section for this. I wonder if it's still on the homepage. Let me have a look here. No, I don't think it is actually. WBTC used to be up here. It doesn't seem it is. And yeah, if we just do that, it seems that they're tracking BTC in... Okay, so they are tracking the BTC in these apps on the main page, but on the actual dedicated Bitcoin page, they're tracking like the tokenized versions, which makes sense. So yeah, this is quite cool. I think, I don't know if there's a cap to how much BTC comes onto Ethereum. I think it only comes for a reason, as you can see from this chart. There's literally no reason to bring your Bitcoin over to Ethereum unless you're going to use it to do something, right? If you're just bringing it over and holding it in your wallet, I mean, to me, I mean, maybe you can make the argument that you're doing it so that it's kind of like all your Bitcoins all your assets are in like one home, right? So you just have them in like your Ethereum address and you don't have to worry about multiple addresses. But again, Wrapped Bitcoin is custodial. I wouldn't, like if I was holding Bitcoin, I wouldn't want to obviously give it over to a custodian essentially and put it on Ethereum. Like I'd just keep it on Bitcoin unless I'm doing something with it, unless I'm yield farming with it or something like that. So yeah, it doesn't make much sense unless unless you're using it in DeFi. I don't expect this to go back down to the levels that we saw over here, earlier on. I expect it to stay up here at and maybe it'll come down a bit more. It could maybe even go down a lot from here. It just depends, right? I doubt it because DeFi is going to keep growing and BTC is a pretty, I guess, like great collateral because it's liquid, right? It's very has a very high market cap. There's a lot of holders and things like that, right? So yeah, I expect that to just not fall too much here, and maybe it starts growing again. I've got another thing here I'm going to talk about later about ETH locked in DeFi, and I want to explain a bit there. But WBTC or BTC locked in DeFi in general seems to have slowed down for now. You can see here, right, across the board, it's kind of, petered out here. This is taking into consideration WBTC and all the other tokenized BTCs as well. But the reason I focus on WBTC is because it has much more than even the second. Like Ren BTC has 14K, WBTC has 115K. So it's basically not really too comparable right now. It's kind of like a winner takes almost everything market in the tokenized BTC space, but we'll see how it plays out. So yeah, I just thought I'd show you guys that because I thought that was quite interesting. All right, so for those who don't know, there is an Ethereum developer called Virgil Griffith. He has been around for quite a while. The reason why you probably haven't heard of him over the last few months is because he literally can't use technology because he is facing charges over, I guess, conspiracy conspiring with North Korea or attempting to conspire with North Korea. So the updates are scarce on this. I think he's getting fair representation. I think he has a really good lawyer. From memory, he has the same lawyer that EOS had when they defended themselves against the SEC and only had to pay a $24 million fine, as I spoke about yesterday, for their token offering. So, and from what I know, that lawyer is actually very good in general, not just for crypto stuff, but in general. So he's got a very, very good lawyer. So there was this news that came out today that Virgil's likely going to face a trial next September. So, I mean, this just shows, like, as a sidebar for a sec, this just shows how slow the legal process is. I'm pretty sure he was arrested, like, late last year from memory, and now his trial won't be till next September. So it'll be almost 2 years from, like, arrest to trial for Virgil. And I wonder if he's going to be able to access kind of, like, the internet or, like, Twitter or anything before that happens. I don't know how it works, but basically, yeah, he's being charged by the US government, and they want to argue that Virgil helped North Koreans better understand how crypto could be used to bypass financial sanctions on the nation. Now, I'm not going to opine too much on this, but I will say one thing. The information that they're saying that Virgil kind of gave to the North Koreans is freely available on the internet. Right? Even if Virgil taught them how to use Ethereum, taught them how to use MetaMask, taught them how to basically go through Tornado Cash, like even like that sort of stuff. Virgil isn't like, it's not closed knowledge. Like he's not the only person in the world that knows how to do this. It's all freely available on the internet. So I just don't see like why that's such a huge deal. But at the same time, like obviously, you know, we don't want to be giving, I mean, the US doesn't want people giving knowledge and over to like the North Korean government and things like that, and I totally understand that. But at the same time, if they're charging Virgil with basically teaching them how to do things when that knowledge is already available online and they don't even have to use Virgil or whatever, then I think it's kind of a weak argument. But I'm not a lawyer, you know, the US government is a lot bigger than I am, of course. I mean, I don't even have to say that, right? It's obvious, but I just feel bad because I mean, Virgil's a friend of mine. I met him at a couple conferences. We got along really well. He's obviously very loved within the Ethereum community. If you've seen the things on Twitter about him, I just think that this is some overreach, and I really hope that what happens here isn't similar to what happened to Ross Ulbricht with the Silk Road case, where he got like a ridiculous sentence for the alleged crimes. I think he got like 3 or 4 lifetime sentences, something ridiculous. It was definitely like he'd be in there for life sort of thing, which was basically a very harsh sentence to kind of send a message and you know, to I guess like anyone else who wanted to run one of these darknet markets. I really hope they don't do this with Virgil. I think that would be incredibly unfair, but we won't know, I guess, until next September now. So still another 10 months out, unfortunately. So yeah, Virgil, I know you're not watching this, but you know, we're thinking of you. You know, we hope that you get through this all right. All right, an update out of the Ethereum Catders this week. I guess yesterday. So for those who don't know, the Ethereum Catders is basically this little group of a few people that keeps up to date with what's going on in ETH1 land and kind of blurring into ETH2 land now. They try to make sure that things are kept on top of, that the community is updated with what's going on, because there's a lot going on within ETH1 protocol development and ETH2 as well. So yeah, they always post these updates, I think once a week or something, or maybe once every 2 weeks, but they're really great. I love them. You can see here that they've got like a really nice summary at the top. So talking about YOLO v3, which is one of the test nets for ETH1 for the next network upgrade, code named Berlin. They talk about ETH1 client updates, ETH2 mainnet updates, client updates in general for ETH2, the 1559 implementers meetings, the EIP, IP meetings, community updates, and more, right? So it's quite a lengthy read here. I'm not going to go through it now, but if you want to stay on top of Ethereum 1.0 development with a bit of Ethereum 2.0 stuff, like protocol work, I would highly suggest following this Medium page. It's where they kind of where they publish this stuff in the Ethereum Catders Medium page. I will link it in the description, of course. But yeah, this is the best resource, I think. There's a lot of things that get scattered around, especially on like the ETH Research Forum and like YouTube and Twitter and everything, and it's kind of hard to keep track of. And the Catders do an amazing job here of this. So definitely suggest going and checking this out for yourself. But yeah, there's a lot happening in ETH1 right now. I think from what I know, we're aiming to have the next network upgrade, codenamed Berlin, to go in Q1 next year, probably early Q1, hopefully. And then there's a bunch of other kind of, I guess, network upgrades that we need to get in as well, or at least EIPs that we want to get in before 1559 can go in. And I actually think when 1559 goes in, that might be the last network upgrade that happens on ETH1 before the ETH2 merger. So the ETH1 to ETH2 merger happens. So that's going to be a big milestone as well. But yeah, if you want to learn more, go click on this in the description and check out this link for yourself. Also out of the cat herders today was a kind of blog post describing the new Ethereum improvement process. So basically, for those who don't know, EIPs it stands for Ethereum Improvement Proposals, and these are kind of things that are required to kind of like be reviewed and go through a process in order to get them into the Ethereum mainnet. So every network upgrade on Ethereum contains one or more EIPs that go in. So EIP 1559, for example, is an EIP, and the number is basically just like sequential from kind of like when it started at number 1 all the way up to, I think it's in the 2000s at this point, or maybe even the 3000s. There's a lot there. Not every EIP actually goes into the Ethereum mainnet. Some of them never do. Famously, EIP 999 kind of died, and what that EIP was to rescue the frozen parity multisig funds, with the majority belonging to the parity team. So that was a famous one that died, and there's many others, right? That people, anyone can propose these things. And submit them on GitHub, and then it's up to kind of the core developers, the community, everyone else kind of in the ecosystem to decide if they want it or not, or they want it to go in. Is it going to benefit the Ethereum network? No, well then it's not going in, sort of thing. So this is basically an update to that process, because that process has basically been defined in EIP 1, but that was published a long time ago, so we want to update that process and make it more streamlined. So I think what they have done here, they've added a bunch of new statuses here. So during the EIP life cycle, there'll be statuses assigned to each EIP. So it starts off as a draft. It goes through a review now. So review is basically one of the new statuses. It goes through a last call to kind of review, and then final, and then it goes from living to stagnant to withdrawn. So it doesn't have to, it doesn't have to go into every status, for example. So if it's a living status, I think they define them down here. Yeah, living is a renaming for the previous status active. So if an EIP is active, then it's alive. If it's stagnant, it means that I think EIPs have gone stale, obviously. If it's withdrawn, it means that the original author has formally removed it. Or I don't think it has to be the author. Oh yeah, I think it does have to be the author. Has removed it and said, I don't want to do this anymore. Don't worry about it, basically. So yeah, there's a bunch of statuses here that get assigned to the EIPs. Now, this is an incredibly important process, and this is how we kind of like do this decentralized governance and come to consensus on things. So you want this to be as robust as possible. So I'm really glad to see the cat herders taking a stab here and making sure that they kind of define this properly and getting everyone on the same page, the core developers, the community, everyone else in the ecosystem, like exchanges, infrastructure providers, app developers, all this sort of stuff. You want to make sure everyone understands the process, and that's what the cat herders are doing here. So again, another shout out to the cat herders. They're doing great work here. I'll link this in the description. You can go check it out for yourself. A teaser from Parsec Finance. Parsec Finance was published yesterday. So for those who don't know, Parsec is trying to be the Bloomberg of DeFi or of Ethereum, where they're going to have this whole dashboard, as you can see on the screen right in front of me, the screenshot, where you can have different widgets and you can go kind of like trade, do things in DeFi, monitor prices, all from one dashboard. Now, as you can see in front of me, in the middle there, they've got like a chart of Uni versus USD, so you can keep an eye on the price there. On the right-hand side, they have a trending kind of little box there that you can keep an eye on which assets are actually trending on the certain day, and how much they've gone up by, what their price is, that sort of stuff. Bottom right, you have like a market cap table where you can see the differences and the changes in different assets based on their market cap. You can see the trades down the bottom, Uni against ETH. I mean, on the left-hand side, you can see kind of like the DeFi fire hose, as they call it, where that's like monitoring different trades and things like that. So these aren't the only kind of elements that are going to be on here. There's a lot more coming. I've actually used this app myself, and it's quite fun to use. So I think this is going to appeal to people who are frequently trading the most, because that's what the Bloomberg terminal kind of appeals to. And from memory, there's also a news section that pulls news and kind of like pulls it up there. So it really is exactly like a Bloomberg terminal. Now, you've probably, I don't know if you have seen a Bloomberg terminal before, but it looks similar to this. But it's mainly, I mean, I think it costs $5,000 a month to have a Bloomberg terminal. So and you don't need it unless you're like actively trading. So most people will not have seen it, but if you just Google it, you'll be able to see what it looks like. But this is really cool. They're saying that next month they're going to be releasing this to the public. So I've been using the beta version, and it's been quite good. So yeah, go follow them, and I'm not even following them. Whoops. Go follow them, and definitely keep your eyes peeled for this, because I think it's going to be really cool, especially if you're a really active trader or someone really active within DeFi. You definitely want this tool in your kind of like tool belt for sure. All right, an announcement out of YAM today. So they launched their official collaboration with UMA protocol called Degenerative Finance. It's funny. One of my friends said the other day that they listened to another podcast I did on ETH, and I struggled saying the word degenerative, and he kind of linked me to the Google pronunciation of it. I was like, okay. And he goes, you called it Degen Finance. I'm like, yeah, because that's what everyone says, right? But the Degenerative Finance, that's how you say it. But enough of that. Basically, what this is that it's kind of a home for this cutting edge DeFi derivatives, they call it. So it's built by YAM, built on UMA, and built for Degen. So see, there you go. It says Degen, so I can call it Degen Finance. So this is really cool, I think. This isn't, I've spoken about the collaboration between YAM and UMA before, but they've launched like an official site here. So if we actually click through here, you can connect your wallet and you can start minting their UGAS token, which actually is tracking the Ethereum gas prices over time. You can deposit, you can redeem, withdraw, and LP, liquidity provide, and trade. So this is great. I really love this. I think that we need more of these collaborations within the ecosystem. I mean, I know a couple of weeks ago I spoke about the YAM ecosystem and how they're doing a lot of different collaborations with different protocols. They called them mergers, but as I said, I thought they were partnerships / collaborations, and that's exactly what YAM and UMA are doing here. And there's a bunch of other protocols just like kind of teaming up and making sure that like they can share resources, because there's no point being a closed ecosystem, having all this expertise and in an open source world and just keeping it close to your chest. That's not the spirit of DeFi. It's not the spirit of Ethereum. And that's not how we can basically make these products better. So I'm really glad to see YAM and UMA do this. I hope that more teams do this. I hope that YAM in particular teams up with other teams, because I think YAM in particular is really well positioned for this. And I've spoken about this before. I know I talk about YAM a lot here, but I actually think that they've got an amazing community. They've got a really, really great treasury to kind of like pay out this community. And this treasury isn't just in YAM tokens, it's in other things as well. They have USD in the form of YUSD. They have the DeFi Pulse Index. They have a bit of ETH. They have index tokens. They have a mixture there. So they have like this strong treasury that they can build over time, and they can partner up with projects and fund different things and get stuff built. So I think that's basically YAM's kind of like innovation here and its strong suit. And I'm really curious to see where this goes. But yeah, go check this out. You can mint UGAS tokens if you want, if that's something you're interested in as well. As I said, you can just do it here, but this will be linked in the description for you to check out. All right, last thing, a tweet from DC Investor today where he basically says that he and I quote, he says, and I quote, sorry, this is the most important chart for the emerging Ethereum-based economy, and it's ticking back up again after the cool-off period from DeFi mania of Q2/Q3 and the subsequent launch of the eth2 beacon chain. So this chart that he's talking about, for those who are listening in, is the ETH locked in DeFi chart. So he's got a screenshot of it here, but I'm going to go back to DeFi Pulse and I'm going to click it here and bring it up for all you to see here. So if I go to, I guess I should go to all here, or if I go to 1 year, it's probably easier to see. Yeah, so you can see on the screen here that basically during DeFi summer, ETH locked in DeFi peaked at about 9.3 million ETH, and then it dropped off after that. I've spoken about how the major drop off that you see here actually was from Uniswap. So what ended up happening was that Uniswap's mining rewards kind of ended, and then people kind of obviously withdraw their ETH from Uniswap that they were using to farm, and they didn't put it back into DeFi. The majority didn't go back into DeFi. What I actually do think happened is that a lot of it went to ETH2. Because if you think about it, there's a kind of like overlap between the Uniswap community and the people who wanted Uni tokens and the people who are farming, the people who have ETH already, right, and wanted to farm with it, and putting it into ETH2. So it's actually quite funny, because if you look at the amount locked in DeFi right now, it's 7.3 million. Do you know how much ETH is in ETH2 right now? It's 2 million. What was the peak in DeFi summer? 9.3 million. I haven't done the on-chain analysis here, but I'm willing to bet that a lot of this ETH went into ETH2. It's probably not 100% of it. I mean, it's definitely not 100% of it, but it seems a lot went into it. So if you actually put ETH2 here, it would come up right under Maker. It would be Maker, ETH2, Compound, Uniswap, right? So technically, we haven't actually fallen from 9.3 locked in DeFi. It's just that ETH2 isn't classified as DeFi. It's just gone elsewhere. And you can actually see that after the kind of drop to, I guess, 6.7 million ETH locked on November 25th, which is funny. I think it was like a day after the kind of deadline for ETH, getting your ETH in to ETH2. After that, we see an uptick here from 6.7 million back up to 7.3 million almost, and it's ticking back up. So people are getting back into DeFi. This could be new people coming in, right? We had those people going to ETH2. That's kind of like at 2 million. I mean, I don't expect it to go too much higher. And now people are going back into DeFi with their ETH. So this was really cool. I thought, it was great for DC Investor to point this out. I really want to do some on-chain analysis on this. I want to know how much ETH went from, particularly went from farming Uni on Uniswap to ETH2. And I mean, I don't have the tools to do that. I don't think it's like an easy job either. You have to basically have all the data in front of you and dig through it. But if anyone listening or watching knows how to do that, or knows an easy way to do that, or has someone who can do that for me, please reach out to me. Just DM me on Twitter, because I'm very curious to see how that played out. So, as I said, if we include ETH2 in this, we're at 9.3 million ETH. We're basically at all-time high. I don't usually include ETH2 in this because it's technically not DeFi, but the kind of definition here has been blurred as well. Locked in DeFi isn't really kind of like accurate, because it's most of it isn't locked. It's ironic because what's actually locked is the ETH in ETH2, but that's not considered locked ETH in DeFi, right? So it's quite ironic there. But I just call this like ETH in DeFi, right? Not locked, because it's definitely not locked. Any one of these kind of people that have deposited their ETH into these different apps can withdraw at any time. Hardly any of them are locked. I think the only ones that I know of that are locked is like Nexus Mutual. So if you buy XNM with ETH and then you stake an XM, it gets locked, so you can't go back and get your ETH straight away. I think maybe a few of the others here, depending on what you do on these apps, will lock your ETH too. But it's not very long either. It's definitely not something that's locked for, like it is with ETH2, for 1 to 2 years. It's very, very short. I think the longest is definitely Nexus Mutual. I think that's a 3-month thing. But again, that's just not locking the ETH specifically. It's locking the NXM that you've bought with ETH sort of thing. But yeah, anyway, I think this is a really interesting stat to keep an eye on. And the fact that it's ticking back up again is really great, because obviously that was that brutal drop off. But I guess it kind of makes sense because of the Uniswap rewards. Definitely makes sense, I think. Even if I click into Uniswap here, you'll be able to see it. Right, look at that. Right, if I click ETH, look at that. 3.2 million ETH down to like 1.2 or something, right? That's 2 million ETH. It's matching up too perfectly for me to think this is a coincidence that 2 million ETH fell out of Uniswap, didn't go back into DeFi, but ETH2 has 2 million ETH in it now. I don't know. I find that really funny, but maybe it's just a coincidence, but it's quite funny to look at. But anyway, I digress. I will end the episode here. So yeah, thank you everyone for watching, listening. Subscribe to the YouTube channel if you haven't yet. Give the video a thumbs up, subscribe to the Daily Gwei newsletter, and join the Discord channel as well. And I'll catch you all tomorrow. Thanks everyone.